Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Kriti Gupta. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Matt Miller and Paul Sweeney. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming us on YouTube. Stocks are pretty much, I think, where they were last time we spoke, Matt, here. Pretty deep in the red as a lot of people still trying to figure out what's going on in Washington.
Yeah, many of them, although Nvidia was down 2% last time we spoke, and it's now only off 0.5%. The reason I note that is because when I was looking at it earlier, it was up 105% year to date, and Paul just pointed out it's up 109% year to date. So it continues to put up bigger and bigger gains. It is now the biggest gainer in the S&P, above Facebook. None of the other companies on the index have done better. So we get the earnings out later, and I'm truly excited to see what they have to say.
Yeah, looking at the action today, we have the S&P off 0.8%, and similar on the Dow and the NASDAQ. But, the volume is, a little bit light today. It wasn't like a monster volume day, a little bit lighter than usual. So it's not like you felt any rush and panic selling here. It just seemed like a reasonable selling off day today. Again, maybe reflecting the continued uncertainty coming out of Washington.
Yeah, definitely the softness here. I think it's also interesting to see what we're seeing in the yield space. The two-year yield still ticking higher, though that seems to be based more on what we got out of the Fed minutes. But at the shortest end of the curve here, you're definitely seeing some anxiety or maybe opportunity, depending on how you look at it. You're paying something like 6.5–7% in the secondary market for anything that matures around that so-called X date. Let's get you the closing bell numbers here in New York. It takes a while for these numbers to settle, but overall, we know the story. The Dow Jones Industrial Average down about 250 points or 0.8%. The S&P down around 30 points or 0.7%. The NASDAQ composite looks like it's going to finish the day lower by 0.6%. And the relative laggard on the day right now, guys, is the Russell 2000 down 1.1%.
All right, so a lot of losers there on a day when most of the companies on the S&P 500 were down. I actually took a look at some of the top losers, or the companies that were pulling the most points away from the S&P 500. Most of them don't really have a reason, right? A sinking tide means all of the boats in the harbor drop. But Microsoft, at least according to Sky News, is going to appeal the UK decision to block its purchase of Activision. It's a $69 billion purchase. I guess now Sky is saying it's a $75 billion purchase of Activision. Whatever the exact number is, it's huge. And investors may be a little bit uncomfortable that Microsoft is going to throw more money at that. So that stock has at least some of a reason to fall. Intuit is also falling. It's one of the biggest losers in terms of point deductions from the S&P 500 after it came out with revenue that was a little bit lighter than the street expected. We should point out that they beat on the profit side, and they also raised their full-year forecast. But that wasn't enough to please investors today, who, in the face of a declining market, decided to sell into it as well.
Well, it's interesting that you mentioned exactly what's declining here, because I want to show you on a sector basis just how much pain you're seeing. It's interesting because you're seeing some of those actual kind of financials, those real estate companies really taking the brunt of the hit. But take a look at what's winning, Matt. The idea here that energy and consumer discretionary both in the green, ending the day higher, but energy really kind of the sole outperformer here. Last time I saw that, where you see tech and energy rallying together, that is a defensive trade bracing for inflation, Paul.
Yeah, on a heavy tape today, there were some winners there. And I was interested to see some of the tech names, the big cap tech names that have really led the rally again so far this year in 2023. They were also the ones that were able to eke out some gains today. And the names that we all know: Amazon, Apple, Meta, Netflix. After, stocks selling off 40, 50, 60% last year, we've got big moves up on a year-to-date basis. And I also want to just call out ExxonMobil. That was also in the green today. And you look down at WTI crude and you see oil trading higher by about 1.3% here. So WTI crude at just under $74 a barrel, moving a little bit higher, taking some of those energy names with it.
Let's take a quick look at what's going on in the yield space here. Pretty much higher on the yield space across the curve. That cheapening continues here, despite some of the efforts here to actually buy back in to the Treasury space. A two-year yield at 4.36 and change right now. Your 10-year yield still camped out around 3.7, and it's not there on your screen, but we should point out when you go to the shorter end of the curve, a 6-month bill is getting you about 5.4% at new issuance here, and in the secondary market, anything around that X date, around June 6th or so, you're paying around 6.5% to 7%, or at least that's what you get if you're brave enough to take that on.
By the way, I'm looking at a headline just crossing the terminal here. Stratasys said to be in talks to buy the 3D printer Desktop Metal in an all-stock deal. It would create a 3D printing company, according to people familiar with this matter who declined to be identified because it's still private. It would be the leader in 3D printing, which I always think is kind of interesting. Desktop Metal as a stock is up 28% year to date. So if they have a premium on top of that, it could be a big jump for this company.
You know, Romaine, you were just calling out some of the yield curve here, and I don't know about you guys, but after last year when equity investors were down double digit, fixed income markets were down double digits, I don't mind sticking around for a couple of years and getting 4.36%. That doesn't sound like the worst thing in the world.
Well, I mean, we talked to so many people on television side. I'm sure you talked to them on radio too. They're saying the same thing. Some of these big fixed income managers. Yeah. I mean, look. I remember. I feel like just maybe a year or two ago we were joking about how these were kind of the most shunned people in the room. I mean, nobody wanted to talk to those guys, and now they are basically the prom kings and queens right now.
Well, Romaine, speaking of shunned, you love to talk about that T-bill, that June 1st T-bill, a 7% yield. Imagine the folks who are actually buying those T-bills right now. When this unwinds, I feel like those are going to be the winners. I just
want to point out, too, just real quickly, because we are, of course, focusing on the debt ceiling negotiations, and the latest daily cash balance of the Treasury is out. We should just point out that it actually did tick up just a little bit. We're actually now around 76 billion, right now, and change in that main fund that the Treasury uses to pay its bills. That's up from about 68 billion on Monday. Remember, this is backwards looking by about 1 day.
And I think the question, as I understand it now, is can we make it to June 15th, right? We've heard Yellen say June 1st is the X date. She's obviously a very political animal in her position right now. Others are saying June 6th. But if we could make it to June 15th, then we'd get another month's worth of tax revenue. I'm not sure if that's a possibility, but I guess we'll see if the president doesn't bend, if McCarthy doesn't bend, we're going to have to get there.
All right, still earnings crossing the wire here. Earnings season never stops. Snowflake out, those shares down about 10%. Here are your first quarter numbers coming in. Revenue, $623.6 million. The Street, it was actually looking for 609 and change. That is a beat. When you talk about adjusted EPS and you talk about some of those numbers, it looks like a slight miss on those. Here's the forecast going forward, and a big part of the reason why you're seeing the shares down. Fiscal 2Q product revenue, 620 to 625 million. That's the range the company is giving. On average, the Street was looking for 646. That would be a miss. Second quarter adjusted operating margin looks like they're giving guidance for about 2%. That would also be a miss. And for the full year, product revenue, 2.6 to 2.7 billion. The Street was looking for 2.7 billion. So on average, they're looking at the top end of that range. So you could call that a bit of a miss as well.
Yeah, and Romaine, at the same time, we're also getting earnings coming out of Splunk, ticker SPLK for our radio audience. Shares dropping after hours, down about 8%, and $89 a share stock. Look, some mixed numbers here. They had those revenue numbers coming in higher, but the adjusted EPS, we're looking at 18 cents versus a loss of a share of 32 cents. Still unclear where the pain actually is, given that the second quarter revenue estimate actually came in higher, an upper range of 895 million relative to an estimate of just 870 million.
All right, we're getting more headlines on the debt ceiling, McCarthy. Well, I feel like McCarthy comes out and talks every hour or so.
What did he say?
He says, we are in a room right now negotiating.
Okay, well,
is that good?
That's good.
Is he saying that from the room, or I'm confused?
They're not having class outside?
Maybe he's on Fox Business right now.
Well, we should point out there is another headline here where he does say, I think things are going a little bit better. Look, I know we're sort of parsing every single word that these guys are saying, and who knows what to believe here. But I guess you want to hear that they are talking, and they are at least willing to signal publicly some degree of optimism.
And remember, we got to echo some of the comments that Kevin McCarthy said earlier today, which is, look, I do not believe the U.S. government will default. So he is still very confident that this deal is going to come through, and these talks that are inching millimeter by millimeter will eventually end positively, Matt.
Snowflake, the headline now read, it sees full year product revenue at $2.6 billion. So pulling it down from the previous forecast of $2.71 billion. By the way, I wasn't in country when Snowflake became a thing. Did we all think that was a good idea, this name? What is that supposed to mean, Snowflake? Are they special? Do they get a medal? Why is it Snowflake? Does anyone know?
It feels like a Paul Sweeney question.
It's better than Splunk, isn't it?
I I don't know which I prefer. In any case, that does it for our cross-platform coverage of markets on Bloomberg Television, Radio, and YouTube. And a reminder that Bloomberg Business Week is now available on Bloomberg Originals as well. We'll be back tomorrow at the same time and the same place.